What's up, team? Good morning. What's up? What's up? Good morning. All right, we're going to do some PPI talk today. Hit that like button, you guys. Get ready to get going. At 10 minutes till market starts. We had numbers come out this morning. PPI is measured change in price of goods sold by manufacturers. It's consumer price inflation, which is the majority of overall inflation. But as we know, this type of inflation we're in is a self-correcting environment where people maintaining their levels of employment, people continue to produce goods, no more bottlenecks that we had before during COVID. The markets will likely just heal themselves, or the prices will heal themselves over time. Plus, the lack of stimulation of the credit markets will prevent people from overspending beyond their means, right? It's harder to get a loan, harder to get a credit card right now, hard to get a home loan. So people aren't driving the prices of normal things up ridiculously on credit. So we're in a self-correcting type of inflation. Do we bounce back up from PPI, drop or carry down? Well, let's talk about it. Yeah, right. Only time will tell. Let's pull it up. What you do every morning is you ask that question. The risk interval is used to determine, and we'll talk about risk interval this morning, to determine if the market becomes stable or unstable after a particular event. And as you see, after PPI, we have moved more than a risk interval, right? So this is interesting to notice, right? Market is irrational today. We'll talk about the risk interval today. So every day, what we're going to do, the echo comment, it could be me. I'm on my laptop. Hold on one second, you guys. What's up, guys? All right, I'm back. Market's opening in 2 minutes. Don't forget, smash the like button. We'll have a little bit of a discussion today over the risk interval. Make sure you click the like button if you're here. No sounding when speaking. Hey, what's up, George? Now, I just was waiting for a minute. Market was opening. I was going to get my coffee and everything set up. I am on vacation. Excuse the lack of awesome sound quality. I'm on a laptop in looks like somebody's arts and crafts room or their house as their guest bedroom. Good morning. What's up, Greco? So there's like a sticker making machine right behind me. Okay, so what happened today is that the market has moved, and one of the things I want you guys to know, we're going to talk about this discussion today, and we're going to start treating our Discord a little differently as we're changing the format of all of Rocket Scooter and our show and everything else and how we present our training platform to you guys. So we're just going to look at something real quick. In our Discord, we're going to start going over some things, and every day or maybe even every week, we're going to cover like one thing. So when you get into our group, we'll cover very detailed one specific topic, maybe over the course of a week or something. We really want to drive it home. So one of the things is that right now in the channel, there's something called the risk interval. The risk interval has to do with the market moving too far to maintain stability. Imagine it being like when you're on an icy road and you skid off course, and then you oversteer, and then you oversteer and oversteer, and then you crash. Right? The risk interval has to actually do with that when the futures markets usually deviate away from the equities markets to a certain degree. The market becomes unstable and mathematically unpredictable. Like you will really just point on the screen and pick something, and you'll have a better chance of predicting where markets will go than any of your analysis will. No technicals or anything can compensate for that over hedging that takes place when you pass this much on an event. So an event today was the PPI, and the AES is 29.5. You guys can write that down, 29.5. We have a bot in our Discord that gives it to you. Our Discord is free, by the way. Check it out. Our members get access to all the tools and all the bots and numbers. This is a very cool exploit. So we have moved at least that far on the event. So when the event moves more than 29.5, we say that it's a catalyst. And in a catalyst, that market is deemed irrational when that happens. So let me go ahead and zoom out. While we're opening and looking pretty good on the S&P, I'm going to come through here and show y'all how I do this. So what I do is I just take I'm using Thinkorswim for this. I'm just going to draw like a random, actually, let me just go to the tick chart and just do it like this. So what you do for the risk interval, go to a tick chart. I'm just giving you guys the number. It's the onset of the event, which is going to be right here. We went up and then immediately came down. So right at 39.90 to go down 29.5 would be 3960.5. So if I go here and I draw 3960.5, this is the level that I'm only trading when we break through this level. Okay, that's it. I'm not touching anything else for the rest of the day. It's very clear. And going forward, since it's a teaching environment, I want everybody to repeat after me. I'm not doing anything to the S&P until the market is above 3960.5. That's 29.5 from the risk interval. So I'm not trading unless the market is above what? Everyone type it. Everyone type it right now. Type it. The number. I'm not trading anything today till the market is above 3960.5. Everyone just repeat it and click that like button if you're here. Let us know. I want you to understand that when I say these things, I'm very, 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 very serious. Irrational markets will be unpredictable, and nothing you do will be able to predict what's going to happen. So on the onset of the event, if you move beyond that level, the futures market has stretched too far for the market to hold its stability at the open. The immediate burst of hedging at the open is going to shift people's positions around. If the market makers have to price the S&P lower than that range, it triggers additional hedging. And when you touch this level, right, I'm going to get there, right? When you touch that level, it'll be an extremely high volume pivot, extreme. So when we get back to it, you're going to want to see what we always teach. When you touch that level, anytime we give you a pivot, when you touch the level and volume declines, whatever side you're on, when you interact with the level, there's no more volume, like that video I released yesterday, then that's the pass through. So let's go ahead and get Rocket Scooter front and center. Let's do some of our calculations. What's up, Kyle? Let's go through here. Let's pull this front and center. Make sure I get my... Okay, so SPY is a bear long up, but we are irrational. And irrational is one of 5 signs that we have that tell us to sit out. And one of the things I want to just really drive home, since we have a lot of new members, is that in our Discord, there are 5 rules that are called irrational. And our platform eventually will have little light bulbs that'll tell you when they're on or off. So you guys, do me a favor, smash that like button while you're here. I know, brother, I missed you, man. How have you been? The last 3 months, it's been crazy. You know, we got Doomsday up in the platform now, by the way. So irrational just means any of these 5 things. Any of these 5 things trigger, it's a no trade for the day. The summary is right here. There's a video that's like 10 minutes long, talks about it. So of all the things that we have, even though we're getting a decent signal, SPY is a bear long up, which means 395 to bear wall, and that's basically it expected today. I'm going to add the resilience indicator so I can predict where the SPY is going to go. And I'm going to see what's going on. So very negative. So today is not a rally day on the rational side until this goes above that. Now remember, anything above that level that I was talking about earlier is a go to trade. But remember, we passed through a liquidity pocket, which is another reason to sit out. So all I'm looking for today is a recovery of 397 and a move. Other than that, a loss of 395 is not necessarily something I'm going to short either. To me, a very sit out day, because when you have those irrational signals, there's not much you can do. So let's pull the scanner up. Let's go ahead and look for some flat stocks. I'm going to teach y'all something today. When you get these signals, when I say sit out and the markets are going to be hard to predict, it's not just, it's like sit out on day trades. Like, don't try to pick a directional trade. There are ways you can trade this, right? When you expect the market to be choppy and unpredictable, there's option spreads you can sell, things like that. Saga begins. You saw my interview at Trading Camp. It was great. Oh, thanks, Saga. Appreciate it. Do you like my story about going insane folding towels? True story. So when we pass through 3960.5, we're also going to hit other resistances on the S&P. So it's going to be really hard to find an entry point today. But honestly, if you are a bull, it's like I am. I'm looking for any reason to be bullish. So I'm going to wait for those breaks. Like a 3970 will be that entry point for me. So you can, if you're a little additionally risky, you have to know that if you do anything from here, there is no short signal, by the way. Irrational is not a market short signal. And this is almost like a fib, but in reality, these are called red lines, and I'm just measuring high to low just to show that retracement level of that. So anytime you hit that green line that I mentioned earlier, as you see, is a very high volume pivot. All of our stuff predicts volume, which is neat. All of our techniques and these bots and everything will predict volume. It's passing through it pretty quick, which is good. Anytime you interact with it, look, there's a volume spike. Even on a tick chart, there's a volume spike. Yeah, so right now I'm saying this is probably a good signal, but we're going to hit that liquidity pocket. And the first thing it's going to do is sharply pivot. So be very careful here. Rest just went positive, which is great. This is the first resistance on SPY, 3960.5. So all the risk interval is one of our 15 counts that will help you predict where volume pivots will be. And that risk interval that I just showed you on the S&P is one of those cool 15 things. Everything has one, and the goal is to know where your volume pivots are when you get to them, as I'm showing right here. This is one of those things. So inside of this band, now I'm considering the market to trade. So what I'm going to do is I'm going to look for trade-offs now. Now, when I come to the S&P, it is pushing to this resistance. This is called liquidity pocket when you're in between a bull and bear zone. So this is not bullish or bearish. So this is a balance point. You're going to hit this level in just a second, and the market is going to likely pivot to return to half gap. And then I'm looking for it to slowly break through that bull zone. So he's also an expiration day. Joseph Foreman says why 29.5. So what the risk interval is one of a bunch of calculations that we do to try to predict where volume will be for different reasons. So each one of our techniques is very inventive and different and unique. So the uniqueness of that one is that the futures exchanges, if you guys are familiar with futures, they set margin requirements for futures contracts based on the expected volatility or deviation from the spot price of the futures contract, where it will have to move to find buyers and sellers based on the net sum of all positions and risk of firms holding those contracts. So the reportable firms. There's a program that the CME Group made called SPAN, SPAN, and SPAN is a program that all clearing firms set margin requirements with. But the CME Group also uses it to set the minimum margin requirement that they have to charge. So when you pay like $10,000 or $20,000, whatever, to buy a futures contract, there's an equation they use to set that. It periodically changes. So we reverse engineered that equation to back into that expected volatility of that futures contract, meaning that if it says 29.5, the bot updates once a week, and it will say that if the S&P moves on an event like this morning, 29.5, and every futures contract has one. We have one for oil. We have one for gold. It's really neat. It's one of the first things we ever made. And all you have to do is tell yourself, it's solves one of the major problems you have as a trader, which is, was that important? Was that news important or not? What's up, Maddie? So if the thing happens and the market moves 29.5 and then comes back in, then that event wasn't big enough to shock the market. It was expected. It's like the expected move of a stock. Do we all understand, everyone? Check. By the way, hit the like button if you guys are here. Let us know that you like the stream. You'll know expected moves for options, right? So expected move is that the options contract, or the underlying of the option, moves up or down a certain expected amount. Imagine it being the expected move of the entire index, the futures contract. So in the overnight session or at any time we use futures to do this, if the market moves that distance, it's outside of the expected move, and you just get unusual hedging. And the proof is when you come back to that line, you will always see volume appear because those boundaries are hedged very heavily, and they are the high volume pivots. One of the highest volume pivots there are. As a matter of fact, index catalyst is near the top-ish of the list. And you see that the first thing you do is break through it on a volume pivot, and then all of a sudden you return to it to test. There's proof of that. So we have a bot that will tell you if your event was big enough to shock the market. So that's all. It doesn't matter if the news was good or bad in your opinion. This is Wall Street's opinion. If the news was so bad that you can't find buyers at that boundary, even the hedgers at that boundary can't keep it going, then that news is really bad, because all your resistance or support will be there. That's where a whole bunch of buyers are to keep the market stable. There's people hedging long at that level as it fell to it, like from the downside. So the example is you fall here, right there, there's a huge buffer of buyers because that is that distance. And so if you get to there and those buyers still can't fight off the selling and it falls through it, then we say that the market is unpredictable or irrational. And so the point about that is that you can't decide where it's going to go, because if the dealers lower price to find buyers and they don't find them, they have a big question mark over their head. Well, shit, where are we going to find buyers now? And you won't be able to determine that with your shapes and colors on your chart. They can't determine that from order flow not showing up when it should show up. It's as simple as that. So the idea is that when you have any news event, was the Fed, was that a big deal? Was that not a big deal? Right. So was that FOMC statement a big deal? Was that CPI a big deal? Was that oil report a big deal? Was that news event a big deal? Anytime the market moves quickly on an event, if the event moves beyond this number in this bot, and again, the subscription that we have for all the calculations and for the Rock Scooter platform that comes with all of this, each one of them serves a purpose. And as we automate everything, we're going to have like a lot of just informational things on the platform to teach this as you go along. And of course, really kind of simplifying the approach as we share like how these things are. So you guys understand, does anybody not understand that explanation of what that is? Index catalyst is right here in the irrational rules, and we talk about it. There's a whole, if you guys want to go review this, there's a whole infographic about it. It's almost the same exact thing as you see. A catalyst is when the following occurs, and we're dealing with a catalyst today. Notice how the market is irrational, rational, irrational below. So in this red zone, it's just going to be unpredictable what it's going to do. And then upside and back in that rational territory, then the market, I start looking for my signals to play out. And I don't take like trades like the market's going to recover and rally. But what I do is I'll trade to that next resistance if I find it. So it's pretty much the same effect. So now it looks like it's holding rational territory, right? And so we're looking for that next resistance as we find it. So let's pop the rocket scooter platform front and center and just double check. Liquidity map is our algorithm that tells me where I expect the S&P to move. So as we know, a bear long up moves from here to there and has resistance as well, which we just saw. With resilience greater than 0, it's another indicator that says this white line is support for the day. And inside of the redistribution zone, which we had a video we made about yesterday. By the way, did you guys like that video? Redistribution zone? That is next level day trading and scalping. That is one of my favorite things to do. That trick at the end with the volume, that stuff is golden. That is one of my favorite things. When you lose that volume, the market makers have offloaded their imbalanced position. And that is key when you're scalping and waiting for that choppiness to break out. So here's the liquidity pocket. The market's hit that stable area. 97 is a go if you touch it. Can we get the redistribution zone? John Rocksuiter? Yeah, we will. The way that I presented it, and I'll show you. Let me see if I can show you guys something. Let me show you guys some secret. You want to see some secret rocket scooter stuff that we don't share with anybody except for our development team? I will show you kind of how it's going to. And I want you guys to do me a favor, since we are developing this, trading platform for y'all. Oh, looks like we're looking at that 397 now. That's a decent setup. We let you guys vote and pick on the direction to go and what we develop. So I'm gonna show you something pretty cool. Where is that drawing? Oh. All right. Ooh. Let me take a picture of part of it. I can't show you all of this. It's got a secret code in it. All right. Let me just snap it. All right. Y'all ready to see some secret rocket scooter stuff? Can you say squeeze? Oh yeah, baby. That's a good set. Remember, you hit that liquidity map. That's that resistance I mentioned. So this is your first random spot. So this is one of our design pictures of what we're doing with the platform. As you see, the auto scaling is the thing we're working on now. This horizontal auto scaling is on the test server now. I tested it. It's great. No more funky scaling. We'll have vertical and horizontal scaling automated so that you will see yesterday's close and open to the left. And if y'all like it like this, tell me. Let me make it bigger. So essentially, the idea is not to have a bunch of junk on the chart. I don't know if I would want to put like a dashed line or maybe shade it differently. That's something somebody had said. But your redistribution zone is this, okay? Right? It's already planned as a way, but when I first drew it, I just drew like gray lines to the side, but it also doesn't propagate throughout the box, right? So the idea is where we put it. And then the other thing is your dynamics are going to appear off to the side of the chart, and I'm actually going to have them closer to here. So these are design documents for what we're going to draw and how we're going to center and line things up and automate all that stuff so that we can get all the automated part of the algorithm done. You guys can vote really quick. Everyone type something. Would you like to see it like propagating through like a different color, maybe not so thick, but like it would be like a third layer. Oh, that's super thick. But if we were subtly able to draw another box like through it, and maybe just like gave it some, like this is the zone. Like instead of it being a solid, it was like something with a hatch. The thing is that how would we detail it where it's not confusing with the other boxes? An indicator that can be hidden or the opacity changed. Oh, that's a good spot. Yeah, I like that, Denny. Like a crosswalk, better on the left, too messy on the chart. Sunshine. Yeah, I think sunshine. I'm on the same page too. It's like there's got to be some way to show it. Even if it was like, those little tiny dotted lines. Again, this is like super thick, like thick. Let me make it thin. If you were to do, the whole point is to keep it clean. But if you were to do like, if it was in the zone, like that, right? You would have, those like little, they're so thin, you can barely see them. Like those tiny little dots. And then being behind this, behind this box, and it's so thin, you can barely see it like that. We can also have it only trigger on if you're in the zone, or an indicator like at the top, you can toggle it on, toggle it off. Like I'm thinking of ideas like redistribution zone. And then you click it and then it shows up. You unclick it, it goes away. Or, if you're in the zone, it could say, do you want to see it? Shaded background is your vote? Okay. If you guys want to propose a way to display that, send it on over to the wish list, and we're all open for ideas. So these are the things that are coming. The toggle, that'd be kind of cool, right? Like display, don't display. Like anytime something flags, my idea is we have your alerts, right? Anytime something flags, there's an action item you can do. So the idea is that we'll have like irrational, 5 different lights. One of them turns red and you're like, okay, market's irrational. You can do something and the platform will change to either teach you what just happened or give you an action to do, right? While you're trading. Look at this, change this, whatever. So the thing could be like in your alerts, it can say, boom, you're inside the redistribution zone. Boom, you broke out. So then the action could be like display zone, display it. So the idea is the interactive in the platform will let you toggle things on and off, but also cue you to toggle things on and off. And then you're like, what the hell is this redistribution zone? And then you can learn on the fly. So if you guys didn't see that video we made yesterday, it's one of my favorite things. And let's go through and let's do it today. And I'll teach you guys. So the risk interval, clearly we are back outside of that irrational band. So remember we talk about that being a very high volume pivot. Anytime you hit it and there's volume, it still has buyers. So don't discount it yet. What did pop irrational? Again, outside of that range. This is the catalyst again. When you went through it, there's volume, just like we taught you yesterday. It's still okay. When you hit it and there's no volume, then that means the positions, there's no longer any resistance or support, right? You like, Laura, you like that background color? Here you go. I like that too. I might do that shading in the back, like a crosshatch or something, or slightly darker. And again, if you guys are artists, y'all know graphic artists out there, or y'all Microsoft Paint warriors, black myself, make a little mock-up for me, and we just literally pitch that to the devs, and they will build it. Like, hey, this will look like this. So you put your cool skills to test. You got your creative idea. You guys get to be part of your creation of your own favorite trading platform. So double checking all of our rules today. Market's nice and stable. Let's go ahead and pull up some possible moves. So I'm going to pull up the liquidity map. If it's your first time here, feel free to let us know it's your first time here. PPI today, by the way, we talk about catalysts and how markets move. PPI today is increasing. This is a month-over-month indicator. Is the change in price of goods sold by manufacturers is one of the leading indicators of the CPI, consumer price-based inflation. So as it's been going up, price has been going up, but a lot of that is coming due to just the cycling of the recovery. So when COVID happened, everyone lost their jobs. Then material prices went way up because you didn't have miners or loggers or anybody out there, working So there's a shortage, prices go way up. People come back to work, shipping, truckers, um, anybody in the production chain of the raw material side produces stuff. We overproduce, no surplus, and prices started to come down. Now people are getting laid off, so spending activity is coming down as well, which means when fewer people are buying stuff, then the surplus comes back, but you have fewer people with jobs, so the production slows down a little bit. So you basically just get like this: no production, overproduction, slowing of production, so prices go way up, then down, then up, and then back to normal. We're basically in the normal zone of just economic growth and stability. This is not a bad thing. We didn't really ramp up higher than normal. The effects of COVID, up, down, is just that cycling of overproduction, losing workers, stabilizing, and then the economy finds a stable spot, which is what we're doing right now. What's my background? I have a degree in chemical engineering, and I worked in oil and gas in my youth. I might sound young. I just turned 41. I'm super hella old. So in my 20s, I worked for Dow Chemical as a reaction engineer. I used to run acrylic acid monomer reaction unit, actually 3 of them. And we used to produce the precursor to diaper absorbent for Huggies. That's right, ladies. Line up for the diaper guy. Let's go. You want me to buy you a drink? Oh, yeah. What do you do for a living? Oh, well, let me tell you my story. You're 47, bro? No way. 47? Dang, man. I was figuring you were younger than me. Super absorbents printed money. They really did, right? Yeah, they do. They print money. That's such. You're an industrial engineer? Oh, nice. Tommy is 40. Tommy, I thought you were young too. Why? This whole time I'm thinking you're like 25 or 30. See, we're like the geriatric crew of trading. We're all the 40-year-old. I go to the doctor and they're all talking about blood pressure and cholesterol now. I'm like, shoot. The doctor's like, you need to schedule your annual proctologist visit. And I'm like, the annual wait, what? I'm like, oh no. The meme from the movies, the white rubber glove, snapping on. No. So yeah. Gotta get your prostate checked. But anyways, yeah. So I was I worked in oil and gas. And so me and a team of engineers actually started the company started the group that eventually led to the company Rocket Scooter. Rocket Scooter, we decided to, and again, Rocket Scooter, even the name itself is an homage to, basic understanding of financial markets in the modern day is like people come in like a kid, like riding a scooter, like la-di-da, like, basic stuff. Here's your crayons, here's your shapes and colors. You're a kid. And we're the engineers that took your scooter and put a rocket on it. We're going to take every indicator that you currently use and we're going to make it better because we have tools that will enhance the flaws that were found in basic stuff like technical analysis. So we are the engineered part of the basic thing. So we're going to take a cheap crap kid's toy and boost it, right, in a way. So that's the whole point. And so what we did was we created a series of indicators, and each one of them exploits something mechanical, as an engineer would obviously do. And we exploit something mechanical in the market or the exchange. So the mechanical side, like when I told you that first thing we talked about this morning, was exploiting a program that the exchange uses to set margin requirements. That's a little more sophisticated than 9-period moving average, right? So the modern day has all this new stuff, right? And it's this overload of available information, and nobody's really kind of dove in to it and made new tools using available info. Like straight up exploits, like an example is I just gave you a number that you can prove that at that number, every time you touch it, there's a high volume pivot, right? Well, the first time you touch it. And so the idea is, wow, you can predict where their volume was. So when you're trading, you're looking for places where traders will be. And that is a way to have a new style of trading. We're not trying to project when price will pivot based on the shape of price, which always seems silly to me, right? Averages and stuff. It's like the shape of the price can predict the future. Like that just always seems silly to me. So instead, there will be buyers there because people are hedging that particular thing for some reason. And that's why we took what we did and kept making some. The problem is we've made too many things that are all good. And so it's a good problem to have. But being pioneers in this field of volume prediction, right? So our whole thing is that you get all these cool tools that didn't exist before. So the problem is you have to kind of relearn a lot of stuff from a different angle. And so our goal is to find a way to make that easier for people to understand. Because that, your traditional stuff doesn't work as well as you want it to. This is because markets in the modern day are not caring about like Fibonacci's and things like that. They don't work as well. When markets are very liquid, it's all computers trading. As people trading, they would make those things happen. But now it's not. And so you have to use modern things. So how can we enhance the Fib or enhance MACD or enhance VWAPs to make them usable? And so we can give you levels that if they line up with your traditional indicators, they'll work much better. So my SPY outlook for next week and into December, sunshine, still bullish. Things are great. We're above monthly hedge pressure, so things are good until we lose this yellow line. I call it bull structure. So just as a quickie little recap, I'm going to go back to some of our rules. There's a thing called trading strats. You guys feel free to go to the Discord really quick. I'll show you this. The Discord link is down in the description below. We have all our indicators are listed here, and they'll just talk about the different ones. So today we're dealing with this, and they're all cool for different reasons. One of the things we're about to do is start sorting them into different styles of trading. So we'll have depending on what you do, like what style of trading, we'll have different areas and sections of the Discord, also being led by different people that do that style of trading. So as you get through, this is just all of them at once. Right now, we explore all of them and show you one strategy that I use to kind of scalp and day trade. So right now, so this is the next, we had another event, right? So let's double check that. We'll pull up the investing calendar. So this is the consumer sentiment from Michigan Consumer Sentiment. Expectations, 5-year inflation expectations, 3%. You can look at these numbers. I don't think it's going to have much of an effect on the market, even though it's expected to go up a little bit. That's the median expected price change over a 5-year period. So it's a little more of a rounded number and less volatile. Consumer sentiment, consumer expectations, inflation expectations. This is a kind of and wholesale inventories. To me, this is going to be very important for today. So what happens in the type of inflation we have is based more on the price of the front end of the manufacturing chain. So raw materials, labor, transportation, things like that are what made things cost a lot to begin with. So wholesale inventories is the total value of goods held in inventory by wholesalers. So essentially it's that buffer between the producer and the sales outlet. So if wholesale inventories are coming down, it means we're buying more than is being produced, right? So if wholesale inventories are going up, it basically means we're producing a surplus and inflation should come down. If wholesale inventories are coming down, then we're out purchasing produced goods and therefore prices will likely come up. So as you see, like leading outside of COVID, inventories went up as we produced into a surplus, right? All the way up into summer of this year. That's when I talk about, Henry saying we have a surplus. And now we're just stabilizing back to normal. So you guys remember when like you couldn't buy like an NVIDIA video card? You had to like get it off of eBay for 10 times the price. And then here, like earlier this year, they were stacked floor to ceiling at every Walmart, every Micro Center, every whatever, every Best Buy. There's thousands of them. And now there's like normal amount now. That's what you experience. Everyone came back to work, rapidly produced because you could sell it at a higher price. Imagine this, right? You make something and everyone had to go home and no work because of COVID. And all of a sudden, prices of everything go up, and you're like, guys, come back to work. I will double your salary because I'm going to be able to sell this at a double the price. So come back to work. Okay, come back to work, make as much as you can, and it's a race to sell as much as you can at that high price. And then once the surplus floods the market, what happens? Prices come back down. So you overproduce and then you stabilize, right? Does everybody understand that? Very chill day. You made $100 today. Bro, life-changing tools you provide. Well, appreciate that. Our goal is to give you more like guidance as far as to know when you're not right in a trade or when you're against the market. And so if you guys have that risk management at the core, we love it. Okay, so just in a nutshell, this is just showing that we are kind of just walking back to like a normal area. The forecast was expected to go up, like inventory surplus, but we're underproducing. And so why would we be expecting 8% month over month in wholesale inventory growth? Because we were expecting people to be producing more stuff, but we got less than what was expected because people have been getting laid off from companies, right? Companies are trimming 5%, 10% of their fat. So clearly we're going to come in underneath expectations, especially this month, right? And that makes a lot of sense. Do y'all understand that? So when you read these fundamental charts, I don't like to think like a fundamental person. I think it's kind of silly to overanalyze these things, but you want to see like this complicated stuff. I'll tell you, data like this is mostly just noise. When you want to look for like any of this data, CPI, all that stuff, you want to zoom out and just kind of get like an overall feel. Like you can see, okay, that's clearly high post-COVID. And then, most days, this is pretty much in the range of a normal economy. So we're basically, I'm not looking at this and saying, well, was that bad or good? I'm explaining to you guys a little bit of the mechanics, but you as a trader, just make it simple. It's like, well, it's back to normal. It's back in the range of noise. So is this going to really be jolting the market up or down? Probably not. But if it does, I'll need to react to it. And how do we know if it does? It's the risk interval again. If that event causes another 29.5 point drop, then it's an event that again was a surprise to the market. So clearly what you see right here, the market moves and goes exactly back to where it started. Y'all see that? Anytime you have an event and it moves and goes back to where it started, it means you priced it in before it happens, so it's no longer considered. That is the rule of thumb when it comes to trading. If this is where PPI happens and you fall and you come right back and tap that level, just touch it once, then you never talk about that PPI again. It's no longer in effect because the market prices in the expectation before it happens. You go outside the risk interval, then it loses that range of expected move and it's overshooting. And once you return to that level, it just means that you priced it back in before it happened. So anytime an event happens, you always want to mark your chart where there's an event here. And so the minute you get back to that level, it goes away forever. So right now we're still trading off PPI. But right here, the Michigan numbers don't matter anymore. So if the market rallies like this, don't tell yourself it rallied because those Michigan numbers were a beat or a miss. Don't listen to the news heads in Wall Street. The fact that it tried to move, came back, or tried to move and came back. The minute you return to the price before they make, because the efficient market theory or hypothesis states that every available piece of information is already priced in. So it was already priced in. You came back to where you started before the event. So it's a non-factor, neutralized. Alan nailed it. Rocket Scooter prevents bad decisions, doesn't eliminate them. Key to trading success. Well, thank you very much for giving me all this sweet commentary. So the idea is that you can say what matters today and what doesn't matter, which is a cool thing to understand, right? So you might hear all this chatter online of people saying, this is why markets moving, this is why markets are not moving. But with a little bit of numbers, right? Is that people are going to be talking about what's causing the market to move. And a lot of people are fairly clueless about why the market moves, especially in the news. Like you'll watch the news, they'll say market moved today off of this number or that number. And it's really just, their job is to find an explanation to satisfy what one of my buddies Soflo calls the Homer Simpson traders. Homer Simpson episode where he went all in, invested in pumpkins at the end of October because they were at a high. And how can they come down? They're rallying. Lost all their money. So the Homer Simpson traders just want to hear the tail end of the news. Why isn't ExxonMobil? It should be. It's right here. Where the absent from ticker list? It's here. We also have, so like a lot of times, so when we have days like this, when the market is kind of like, by the way, we're back in positive territory in the S&P. So be on the lookout for some plays. You get okay. Let's talk about things on the scanner. So let's look for, what I like to do is I want to look for just double checking where the market is. So we are kind of stabilizing a little bit. Y'all understand kind of like how the tools that we have are designed to like essentially what we want you to do. And when we're done with all the stuff we're making, there's going to be alerts, on the platform that'll say things like, don't trade today based on the rules you want. Like you could come in here and like certain ways you trade because we'll teach you a style. You're like, I'm a swing trader. And we'll be like, click a button. These are your swing trading rules. And each one of them, you can click on them. If they flag, it'll be like, this rule is flagged. Don't trade today. Don't trade today. Don't trade today. Don't trade above here. Don't trade below there. Things like that are going to show you where the market is like statistically in check and just staying put, or breaking out, or predictably unpredictable, which is the best thing we do here, is to tell you like when to sit out. When the market's irrational, it's very, very much mathematically unpredictable. As a matter of fact, you can write code to backtest that and prove that under ideal conditions, like perfect setup conditions, it just randomly goes anywhere. And so that's kind of the whole point, is that when you trade and you feel like you're just flipping a coin, it's because you're trying to trade every day, and not every day is a trend. Not every day is a move. So the idea is that we can isolate, is it a trending day? Is it a flat day? Is it an unpredictable day? And each day you can try to trade it differently if you know different styles of trading, or you can just sit out. DK, what's up, Starbucks? Yeah, let's check it out. Let's look at Starbucks. Okay, so how liquidity map works is just easy understanding of this part. I won't go through the whole spiel, but the algorithm gives you a series of letter codes As long as markets are rational, these are my pivots. And you will go down here and it will show you that particular thing. So Starbucks is mean reverting. So right now, Starbucks is in a liquidity pocket. So it is found balance. On watch today, there's a 104 kind of resistance limit. So 103 to 104 is it kind of a breakout scalp on Starbucks. I would be concerned though with the S&P losing traction in general, that the stocks in the S&P are not going to be that bullish today. But we'll see. Plus, it's expiration day, so I need to kind of get a little confirmation. But yeah, Starbucks. I like Starbucks as a company. I think it's a great setup. I think it's good for a play on a longer term. I think if I was longing anything right now, especially through the holidays, right? I think holiday sales are going to be good. Starbucks is the only time I go to Starbucks for the most part is when it's cold. But they always have those. I think it's great. I think it's great for a breakout play, 100%. I would personally, for most of the stocks that I know that are recovering, I'm the person that said in this group, I tweeted back in October that we were bottoming for the year and bottoming through quarter one. So we pretty much were on point, and we called it like a week before it happened. So that is where I think we're going. And I think we are continuing to bottom, and the market's going to continue to rally into the new year. So Starbucks plays like going through quarter one earnings. I certainly, if I were buying options, I'd be looking to fill some gaps with even February or even March expirations if I was wanting to trade something like this, even in the near term. This gap right here at 111 is a target for me. I love. Ladies want their, you know what I'm saying? The ladies want their Starbucks holiday cups. Even the gentleman wants their Starbucks holiday. Every year for my birthday, my dad gives me, I'm 41, right? So, when I was a kid, your birthday, you get cool presents, right? Like, what do you want? Legos or something. You get older, your birthday tends to be like something practical. Like my mom would be like, here's a new backpack for school. Oh, thanks, Mom. My dad would be like, here's $1,000 for your textbooks for college. I'm like, okay. And then you get older, it's like, what do you want? And you're like, you already have everything. So probably from age like 20 something and onward in college, my dad got in the habit of buying me Starbucks gift cards. And every year I'd get like $100 with the Starbucks. And I never really went to Starbucks like habitually because I just was like a coffee snob. So I'd make my own coffee. As a kid, I'd had a French press actually. I'd make my own coffee, but being like 41 now, I still get a $100 gift card from Starbucks. And there was a period of like 6 or 7 years that I forgot that I got them. Dude, the breakfast bacon Goudas are good, or like the turkey bacon sandwich. I'm not normally like, because it's like turkey bacon and egg whites. I know it's like a healthier quote unquote option, debatable. I just like the way it tastes. I always get the turkey bacon from there. It's so good. So like for like a period of like 6 years, dude, my dad like got me these gift cards. And I remember one time I was like cleaning out my desk and just going through, and I just found like stacks of these Starbucks gift cards. And so I threw them into the Starbucks app. And like during COVID, I swear I had like $600 or $700 charged of Starbucks gift cards. And 2 years have passed, and I still haven't used more than I've gotten. I still get more. So like I'm floating on this huge Starbucks balance that's never been used. And now I'm like, well, because of inflation, here's how cheap I want to be about it. Because of inflation, maybe I shouldn't use them right now and wait for prices to come down, right? Because the $100 back then would have bought more coffee back then than now. But I go in there to get this like turkey bacon sandwiches. You want a Rocket Scooter lifetime membership? Yeah, that's great. You can buy the software outright, which is one thing we do have. There is a discount. It's 10% off that lifetime. And what it does, you get lifetime data feeds, all the tools we make, and it's all, and all the future stuff we're doing. So we are launched officially as of August of this year. So we've been developing for 3 years, and we have, as you see, like a whole list of stuff, of features and tools that are coming up, but mostly it's automation of the algorithm. So let me show you guys something cool. So essentially what you have here, anybody here is a lifer, anybody here has been here for a while, feel free to tell some of the newer folks what you think is how this stuff integrates with what you currently do and what your style is. Even if you don't fully go into like what we do, all 100%, there's a few, you can always pluck 1 or 2 indicators to really beef up the risk management of what you currently do. like this is my seller trading, looking for scalps. And so an example is like the letters at the top of the indicator, or the indicator at the top of the platform, gives me what we call liquidity map, which is where I expect buyers and sellers to be based on different. It's like a super indicator of all of our stuff, or a big chunk of our stuff. Okay, Saga, I'll grab you in a little bit. So let's go, for instance, here. Let's just put up like QQQ. And QQQ is going to tell me the current state of where things are in the market. Did I open the older version of the platform? Liquidity map is, there it is, okay. And our goal is to make things that make sense on a logical basis. Like, you don't have to be a genius to understand a lot of this stuff. It's like, where's there going to be volume, right? And again, like any one of our pivots that you see, the 3 lines, there's always going to be high volume when you get there. And the idea is that these letters are indicating something. It's just a series of code letters, and they translate to what you're seeing here. So this BRLU is telling me to look at this one. If I'm a bull, I'm pivoting off of here to trade somewhere to the next resistance. So on this break of this blue, I'm trading to the next resistance. Well, the next resistance in this example is going to be the edge of the bear zone, right? So you have this bull pressure to the edge of the bear zone. So that is what liquidity map does. So I would isolate, okay, there's a pivot from here to some resistance. And one of the things we teach you is that if you open in the bear zone, you stay in the bear zone a lot more than you don't. So you guys remember the percentage? The rules are, if you open in bear zone, you stay in the bear zone, what percent? Y'all remember that number? In the S&P. So our back test shows this high probability that when you're in the bearish side of all positions, y'all remember them. Hey, yo, what up, Ashton? Check Disney on Rock Scooter. Garrett nailed it. 96% was the back test in the S&P. So if you stay here, 96% of the time you will close inside of here. So if you're trading up to the next resistance, then this becomes your next resistance, right? And then, of course, these hedge pressure numbers, it was an 89% chance that you broke them. Like if you opened above this yellow one, then 89% of the time you'll close above this yellow one. You open below this blue one, 89% of the time you'll close below this blue one. So there's a high probability that we don't break here and we sandwich inside of here. Now, again, markets can move any direction they want. That's just a back test, so take it with a grain of salt. But it lets me plan a trade. So ideally, it's like on this break from here to here, I'm not jumping in on the long. As I mentioned, the first thing when the stream happens because there's your resistance. Does that make sense? So I knew there was no trade, which is why I'm not jumping here saying, all right, guys, buy the dip, long the fork. I can tell before the market even opens that there is no trade all day long. And I'm sitting here saying no trade. Anybody here also sit here and say no trade? Let's say Ashton Sands, pull up Disney. Let's check it out. I'm a huge Disney fan. One of my favorite stocks, one of his favorite stocks too. Yeah, normal markets without a catalyst. Rule-based trading, it's different. And for some reason, let's check Disney real quick. That diagonal line means that we're missing data. So let me see what's going on. Maybe I didn't get a server update. Let me pull up the classic app real quick. We have a smaller condensed version of Rocket Scooter that I can look at and see more information without the charts. Or I'm sorry, same information just without the chart. So let me look at Disney real quick and see what's going on. For some reason, we didn't get the ball got dropped on Disney. This is something that happens with our data providers, particularly with Disney and a couple of stocks. For some reason, our data providers will drop some dates for Disney, and it's weird. We complain about it a lot, so it looks like today's one of those days. Unfortunately, you don't have that monthly hedge pressure for Disney, so you're missing a few stats, but you do have some of the data. You just don't have the full liquidity map. So 91.5, and it's a little congested in here. So above 91.5, which we are, is bullish, and then resistance is at 93 or 93.5. So Ashton, any break of 94 bumps in 95 and again comes back down. So 93.5 is the liquidity pocket, which is the balance point of Disney. As you know, we talk about that. And it looks like you were at 93.5 right now. So this is nice. And of course, this is illiquid. So if I were day trading Disney, if it goes to 94, it will rally to 95 really quick. Illiquidity pockets are a quick jolt from you go to call zone to put zone. These are like rapid moves. So one of these rules is that when it's oriented like this, the market blasts from one side to the other very quickly. When it's bull zone above bear, the market hugs the middle. It presses to the middle. So this is like repulsive. This is like attractive like gravity. So Docu looks great. Let's take a check in Docu real quick. So like if I were longing Disney for a day trade, that would be the extent of the long for today. I would get out 93.5. So this is one of those days, and I asked your style of trading, is that this very small probability we break through 94. Resilience is low, so the market's kind of sitting flat. Breaking through 94 is a rapid move to 95, and 95 is resistance. So I would sell call spreads personally if I were trading this way up in here, right? Way up in here. And I would really not sell put spreads because the market is looking to the downside today. So like if I wanted to just cash in on a little premium, I'd sell a vertical call spread. I would buy 94s and I would sell like 96, 97. So that range is like 1 point of distance. So I would sell at least 1 point outside of that bear zone boundary. So Ashton is, by the way, if you guys know Ashton Nolan, one of my favorite dudes out on the scene is a butterfly condor champ. Guy knows a lot about a lot of things. And so he's going to help me develop some things in the monthly map. And he's coming up with this badass strategy. If you guys don't know Ashton Nolan, follow him. He's on Instagram, he's on Twitter. He's creating a style of trading that will integrate monthly map with his already awesome style. So monthly map is a way for you to pick which time your expiration is at in the future for a stock. So how you pick your expirations. One of the things that option traders do not have the ability to easily do. Why would you always ask traders, I always ask them, like, why'd you get this expiration? Why'd you get that expiration? And most of the time, their answer just sounds like junk, like they made it up. Like they don't know why they did it. They just picked it, right? So we created a style of trading for people that buy and sell options to pick when they expire based on liquidity map stuff. So monthly map is like mapping out Disney for the course of the month. Like where do you want to aim your dart at one point in time? And it's a cool thing that we're making. Yeah, so when the chart looks wonky like this, when you have a diagonal line, it just means we're missing data. So it means that's just the artifact of we didn't have monthly data today. So it's really hard to kind of pinpoint how to do this without all that stuff. But let's do like, if you guys want me to demonstrate the monthly map feature, be kind of fun. Somebody you want to pick a stock, we can go through and show it. So some of you guys are saying, so you DM me, which Discord channels your subscription not showing up. Let me get you, let me get you your access here really quick. Give me some stocks. Kodo, you signed up to the monthly. Let me double check. I thought I gave you access, so let me go here. And welcome to the team, by the way. Scooter Squad, first trial. Yeah, you should have access. Koto, if that's you, you should be good. You have Scooter Squad access. Oh, what did you sign up for the monthly? Yeah, so you should be good. Oh, wait. No, let somebody else. Hold on. 0. How much is Rocket Scooter per month? You'll see on the website. It is $199 a month, but we still have Black Friday, which is 50% off every month forever for the rest of your life, which is a crazy ass awesome deal. It's all for early birds. So Black Friday monthly will make it equal to like $99 a month forever. And that's the best part. ASML. Love you, Maddie B. Love you too, bro. Smash the like button, guys. Thank you. Do you get billed at the end of the free trial? No, you don't. I think, and that's also another thing too. And one thing I hope you guys like about Rocket Scooter is like when you go and again, I actually, do you guys know y'all know A Stocks? AJ Singh, A Stocks. He's in our group. He's one of our ambassadors, one of our moderators. Really cool guy. He's been on a bunch of podcasts with me. I went and hung out with him last night for the first time. Me and Nicole took him out. Went to this little bougie cocktail bar and just chilled out and chatted Rocket Scooter and chatted life. Some really cool ideas. Do I do live trading every day at the membership? Yes, I do. As of lately, we're in this kind of vacationing a lot mode. So when I'm on my laptop and things like this, I don't have my full setup. So the stream is a little limited. So what I can do and what I can show, I don't have all my screens up, and I usually go on slow roll when I'm traveling. And when markets are irrational as well, like today, we just wake up and teach something instead of trade something. So like teaching how to sit out is one of the best. I think y'all can probably agree. The most valuable thing we teach here is how to sit out properly and how to not feel like you're missing out on something when you know for a fact you're missing out on nothing. JP Morgan. Okay. That's the first thing you guys said. You like para? Market said, okay, let's double check some of these. Para. Let's do a monthly map. Now, Para did, Paramount is good. I like that one. Let me see JP Morgan. I want to find something that looks like it's going to be fun to map. JP's probably peeking out. Document MU. Let's do MU because I like the idea that there's room for this to move, right? So let's do a quickie monthly map. So what I'm going to do is I'm going to pull out like Rocket Scooter Classic. And yeah, if you guys do support our community and support our group and support the platform we're building, you get access to all this stuff. It is $99 a month, and it gives you your data feeds, which is a huge portion of that fee. But you also get all the access to the training and the things that we do, plus all the indicators that we make. And it's going to be really fun for y'all. Anyways, I talked to A Stocks yesterday. We hung out and we had a kick-ass time talking about Rocket Scooter and ways to go. So the idea is that all of our friends that are going to be working with us, right, we're going to have specifically, we want to make sure that things that we make are easily digested by everybody. And so one of the things that I'm going to work with, especially with monthly maps, and like saying, Ashton here is making this really kick-ass course. And when he does, I will personally pay for it myself because I want to learn what he's teaching. But, selling iron condors and butterflies, like, these are things that I would love to learn. That's a strategy I never do. And I always want to learn something good from somebody that's great at teaching. And so we can enhance that with a little bit of guidance with monthly map. So like Ashton might have his hand in helping me create how monthly map is shown, what's used for, and even some of the strategies we don't know because it's such a new thing for us, is that it's a brand new technique that we've come up with. We don't know all the power of what we can use it for. We just know what it does and what it's supposed to do. And are there things that we can come up with it? And can we create something really badass with that one strategy? So in our Discord, we would say, like, those of you that are buying and selling options to day trade, swing trading options, in each place will have different courses and things you can learn, different styles of trading, and you can sample different ones. What is the upgrade charge from yearly to lifetime? We don't necessarily have an upgrade, like as in like prorating what you put in the yearly, Lori, because I think you were a yearly, if I remember correctly. And if you go to the lifetime, just chat with me in Discord. We'll talk about that there. There's no way for you to upgrade, and it doesn't like apply what you already put towards lifetime. But like, I won't make you pay the full amount on top of the yearly if you're going to go lifetime, because you joined like a month or so ago. Mark Ellis, you're a lifer and love it. Love you, Mark, man. You've been around for a while, buddy. Easily can determine if the days worth trading or not. Saga begins. Yeah, the long name starting with Kodo is mute. LL. Yeah, Saga, you got that, man. I gave you the access. You should see everything because you got Scooter Squad. Smash the like button. Okay. And so, this is another thing I was saying. You get billed at the end of the free trial. That's why I started talking about A stocks. One of the things that is very lacking in this industry is transparency. And one of the things that ASOX told me yesterday is that I'm a terrible salesman. He's like, Matt, you're too smart and you're too nerdy and you suck at selling your own shit. He's like, you made the best thing that exists for traders and you don't know how to sell it. I'm like, I'm terrible at selling. I'm just horrible. I'm such a geek. And instead of making one thing and being like, ooh, I can sell this to the masses, I'm like, I made one thing. Let's make fucking 14 more things. Just keep making stuff, right? So we've made this whole amount of stuff. And everything we do is like fair and awesome. Is there like, you get billed at the end of the free trial? No, because I think that that's a shady business practice to like get you in. Oh, just give me your credit card, sign up for a free trial. And if you forget to cancel, you're charged, right? I think shit like that is so shady. We refuse to do it. As a matter of fact, we don't even make you put in a credit card to use the free trial because we don't want to be shady salesmen. We want you to be as fair in your decision as possible, even to the level of buying our stuff is about transparent and not like tricking you or trying to be a guru to lock you into something you didn't want to buy. And I know that it's not kind of, I mean, gyms and tanning, like my tanning place I used to go, right? Get my spray tans. They don't let you cancel online because they make you drive your ass up to cancel it. That's a sales trick to force you to hedge against your laziness. So you ain't gonna go cancel it. I didn't cancel that shit for a year and I never went, right? Everyone does that, and I still think it's shady. Man, I'm like, you guys are traders. I don't want to nickel and dime $100 out of you unless you were 200% sure you wanted to buy it. It's not like we're not gonna muscle you in. Oh, you forgot to cancel, or you forgot to, cancel your free trial, and then all of a sudden it charges you, and then you're like, I want a refund because I didn't want to pay for it. Like, I think that's just silly. And I never wanted to do that with my own business because I think that, why would I teach you to make great financial decisions while I pad on top of that a shitty financial sales trick, right? I think that's kind of like what everybody does. And I think that's a little shady and counterintuitive and counterproductive to the idea of teaching you guys to make better financial decisions. Right. So you shouldn't be pressured into making a trade. And a trade is an investment, something you think has value. And so why would I pressure you into making a trade into Rocket Scooter? So we'll be wrapping up in about maybe 15, 20 minutes. It's saying your subscription is canceled. Some kind of, oh, you're talking about on the platform itself. Yeah, and you didn't cancel anything. Can you go to tech support and then send me your email? Because we had, there's no reason you should have been canceled. Yeah. All right. Let me let the development team know. I'll send them your email right now. Okay. Yeah, just hang out those. All right, let's do a monthly map really quick. But yeah, so ASOX, he was telling me, he's like, Matt, you're just a horrible salesman. He's like, you're a great speaker, you're a great teacher, you're a great trader, but you don't know how to sell your thing. And I was like, yeah. He goes, and what you made is beautiful. And he said, not only did you not just make one thing and write it, you made so many things, and there's so many applications. He's like, we need to get everybody using different features of this. So you guys can not just learn like my style with all of it, but you can learn like bits and pieces from a bunch of teachers and presenters. So I would love to hire people in different aspects and different styles of trading and teach you how to integrate Rocket Scooter into your trading. One or two pieces, like not the whole thing, but like whatever style of trading you have, don't just come out and like, okay, I'm going to change it tomorrow. But it'll be more like, how can I make your style better with some one or two techniques from our tools that will be better. So monthly map is a cool way to map out micron for the next month. So I'm going to do one expiration at a time. We'll do the Fridays from the 9th through the 30th. We'll see a month out. So what I'm looking for is the split between bull and bear side. And you can see 55 and 56 is today, right? I'm just going to draw these boxes just to show where the bull and bear side is. And monthly map will display it this way as well. It's going to be pretty dope. So what we're looking at is just market maker options, and that's what this is. Our main technology isolates market maker positions from everyone else. That is the meat and potatoes, and that is the game changer at the core of what we do. So 67.5, you can see way up here for next Friday. Huge, huge, huge range. 57.5. HG is called half gap, Joseph. It's the halfway point between yesterday's open and yesterday's close and today's open. And of course, beyond monthly, you have limited visibility, so it's kind of hard to map anything beyond monthly expiration because you see the options are kind of in a different spot. The orientation is different. 55, 60, right? 56.5. And of course, we go one more month out, it'll be the same thing. They'll be backwards and upside down. And you'll notice that when you're doing monthly map, it's an interesting phenomenon, but beyond the very, 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 very thick wall of monthly expiring options, risk is hard to determine more than a month out. So what you'll see is that the liquid market is perceived as illiquid beyond that. And this is one thing I want you guys to know as an Ashton, if you're here, this is something for you too. You and Kim Carson should do a podcast. Just quant volume flow. Is that the guy? I'm looking at him on Twitter. I'll check him out. He went to Rice from Houston. How about that? Not familiar, but I'll love to check him out. Rice alum. That's my home city, Houston. Okay, so in monthly map, right? Do you have Ribbon ticker? Yeah, we should. Okay, so make sure you guys go over and check out the free trial while you're chilling. We may not have some stocks don't have weekly options, so that might be one of the things. It might only have monthly options. So it has monthly options, but there's no daily. So some stocks we don't have weekly options for, so just monthly will work. Yeah. So not all stocks will have weekly options. What's the subscription going to be after the free trial? After your free trial is up, if you join with this code, right? And this code actually ends today, or this weekend. This will make it $99 a month. It's half off, and that will stay half off forever. So the idea is that, well, actually $99 a month. It's currently $200. When we get futures, forex, crypto, all that data in our platform, Rocket Scooter Full Edition could be upwards of $300 or $400 a month if you want all the bells and whistles and all the data feeds. So if you lock in that early bird, like as we're building to our first 1,000 members, $99 a month will stay that way for life. It's like you being the first person at the gym. Your buddy pays $20 and you pay $200, and you're like, how'd you get $20 a month? Like, well, I joined the gym like the day it opened, like when they had trying to get members and stuff. So that is literally going to buy you every data feed that we ever have, and we will lose money on you at some point. But you guys can have $99 for the full version. As we keep adding features, you'll get all of that, and it will be that way every month. So that's kind of and a meet, even if it has weekly options, like our data providers sometimes don't send some tickers sometimes. It's just a small thing, and we've been working with them to improve their process. But we have institutional data providers, so we have like the top of the line you can get, and even they have problems supplying all the data because of as much data as we need to pull so quick. So we've been a continuous thorn on their side to press them to improve the quality of their data feeds. And they usually say, well, why do you need every option for a stock like Ribbon at exactly the moment the market opens? Like, oh, we have this thing called resilience and hedge pressure. And they're like, well, nobody's ever needed that much data that fast in the history of Wall Street for obscure options on every corner of the ladder. Like, yeah, well, we do now. And so that's one of the things. Sometimes you may have a ticker that's missing some weekly stuff, and that we're at the mercy of our data providers updating their stuff. And as we're pressing them, they are updating very rapidly and improving their infrastructure. But we bottlenecked a very, very top tier professional data feed company. Believe it or not, little old Rocket Scooter is bottlenecking an entire company's data service. So that's kind of cool to know. But as the amount of complexity of what we do, the amount of data we pull is large. It's a large amount of the expiration. And this is a new thing that's coming out. Rocket Scooter will literally draw this for you on the charts. The monthly map will look like this, at least rudimentarily. And to be honest, one of the things we're going to do is actually utilize Greeks to make these lines curved, which is appropriately what they should be. So you can isolate and forecast. Now, to get you something started, it would look like that. But in reality, as you get to here, it's going to be more, it's like a different thing. So it would be more like a day-to-day curve. And I'm just going to draw it like that. A second drawing, but you get the drift. So ideally, what it will do is it will show you that like above here is bull zone and below here is bear zone. So if I wanted to long on a breakout, right now, if price goes nowhere, it's bearish until monthly expiration. So if I break out today and settle here tomorrow, then I know I'm in the bull side for now. But if it doesn't go anywhere for 1 or 2 days, I'm no longer in the bull side. So I know like how far I need to go to be bullish now, or how long out in time I'm still bullish. The launch yearly code, check it out. Might as well grab it. It was supposed to expire with the Black Friday stuff. So it's the last day of the year, the 31st of December. It says at the bottom. So you got until December 31st. Check it out. So ideally, so like if I'm looking at Micron, for example, is that Micron needs to go to 68 or wherever that is, where it stays bullish. It needs to follow some kind of trajectory to stay bullish. But if it stays where it is now, it's perceived on monthly as bears are willing to short higher a week from now. It is less bearish today than it is a week out from now. So it's more bearish. So if you want to be bear for just today, it's going to be even more bearish a week from now. So you have a higher probability aiming your bear trade a week from now. The TOS liquidity map script in Discord, we don't have, I think so. Whatever they've made in TOS will be in the Discord. So like here, yeah. So Alan is saying like, what I would do is I would sell calls. Like if I'm 0 day, I would sell that we don't break bullish today. And even so, if we pass to Monday and the map is still the same on Monday, my call spread would be I'd buy a call, like just in case we break out of the bear zone, and I would sell a call way upside at 68 or higher, or wherever it ends up being that day I make that trade. So when I make that trade, I'm going to redo the map and it may be like right there. But right, if we're in bear territory, 96% of the time we expect it to stay in it. And then so I will not be longing this thing. I would be taking the not bull side, i.e. I would be selling calls up here. Another thing about monthly map is it's showing you that, see right here, the distance between the two zones is really thin. There's not volatile. And as you see, as the week has gone by, the day-to-day is roughly this distance. You can see that the expected volatility is reflected here. This is the expected volatility of this week. Imagine the expected move going from 1 point to 10 points. That is 1,000% increase in the expected move in volatility. Why do you think that monthly is so wide? And this is going to be the last thing I teach you before I get out of here for the day. Why is that monthly range so wide? What between now and the 16th of next week? Yeah, you nailed it. FOMC. And this is what's cool about monthly map. You'll stare at it and you'll say, oh shit, wait, why is the volatility so high? Now, one thing you'll notice is that in monthly map, you have no visibility beyond the monthly expiration. You see right here, it's upside down, right? You have calls below puts. So anywhere, if you look here, right? If this is bull zone, anywhere up in here, bulls are winning and bears are losing. Down here, bears are winning and bulls are losing. But over here, anywhere, there's one side that's always winning. And in the middle, both sides are winning. In the middle, nobody's winning. So the opposite is this is perceived as illiquid. When put walls are above call walls, it's perceived as illiquid, which makes sense because the market makers have no visibility beyond the institutional closing of monthly options. So the reason we know that monthly options are so important and to separate them is because as you can see beyond that wall, you have no perception of liquidity. Here's liquidity between put and call zones, right? Like this. You have bulls and bears both losing in the middle. So the market's liquid right here when everyone's losing. Market's liquid right here when everyone's losing. So the idea is in here, there is no period where everyone's losing, right? Up here, bulls are winning, bulls are winning, bulls are winning, bears are winning, and bulls are winning. Both of them are winning in here, and then just bears are winning here. So there's no place where the house is winning. There's no perception of liquidity. Liquidity would be if it's oriented like that, and there's where buyers and sellers have close proximity. Here, buyers and sellers are everywhere, and it's hard to gauge beyond monthly where liquidity is. And that is proof of that and why we say that. Isn't that cool, right? So when you're trading, in your swing trading, the best time to enter a monthly long or scaled swing trade is closer to the front of the month when you have that, because every Friday, third Friday of the month, big institutions roll into the next third Friday of the month for the big holdings that they have. And then nobody's doing anything beyond that because the market makers are waiting for them to make their decision, to position and plan for the next month. So trading actually takes place month to month from the third Friday to the third Friday. So the first day of your trading month is the fourth Monday of the month. That's when the month actually starts for you. And the best time to make a trade in Micron would have been to make a monthly map here over the course of here. As you get closer to monthly, your visibility is bad. So you should never aim for like a swing trade inside of here because you don't know what's happening. Now, if you do aim in here, you're basically guessing, but when you cross this barrier, you need to redo the map. And that's the whole point of that. Okay. Docu, yeah, let's do it. And you'll see the same thing in all the stocks too. So it's a neat way for you to plan like when you're going to trade. So right, I just immediately use monthly map and decided Micron is to sell options, right? not to buy calls, but to sell calls. As Alan had guessed correctly, I would do the same thing if that was my trade. So let's do Docu today, right? And you can see that there's two, let's start a single date, type in the date. I'm doing a Thinkorswim second draw, 45 and 40 for today. So clearly like today you got, I'm just drawing random boxes to show that split. All that matters is the split. Let's chunk that 16th on here. And you can see there's two ranges. This is interesting to see it like this. So there's been a catalyst. So clearly there's different pockets to look at. So there's two liquidity pockets, and you can see there's 65 and 70. So let's put them both here. So it has two places to land. And the reason it has two places to land because there recently was an earnings call, right? So you can see how after earnings, you get a couple of options because of FOMC. Remember, there's expected volatility, and the market becomes liquid in two different places. It's liquid here, and 45.30, it's liquid down here. So it's like 45 to 50. This is 55. So again, this is a fun one because I like when you can do this. Okay. So again, you look for what's called liquidity pocket. Let me just draw like something here. This is liquid. That is liquid. This is illiquid. So the way that liquid works is that this actually does look ugly. Should be drawn here. So the market is liquid here and liquid here. Anything above 45 and below 65, the market is very illiquid. Hello? Speaking? So here, so if I were to buy right now, the market is, and let me draw the map really quick. Again, assuming we don't have the curved lines. And we'll just do green for bull and red for bear. And I'll be done in like 2 seconds, and we're going to call it a day. So you have bullishness up here and bearishness down here. But you also have a neat thing going on where the market is and how I'm going to display this is like a different way to do it. I wish I could draw it here, but essentially it's like inside of here, it's bullish with resistance. So let me just take this and go like that. Boom, boom. Okay. So here, you're going to see like right here is bullish, right? So because you had two earnings reports, there's two liquidity pockets. There's one target and then there's one target. So the FOMC expected range is that this is the lower boundary of balance. This is the higher boundary of balance. So what's neat is that going into FOMC, I will sell calls up here and I will sell puts down here. Do we all understand that so far? So basically the market can stabilize and find liquidity there. and stabilize and find liquidity there. So these are called liquidity pockets. We have a bull zone, bear zone in the middle. This is called illiquidity pocket, which means it's a rapid spot where there is no support or resistance. So this rapidly will move from one side to the other. Like that. So this is your high delta, high gamma zone right here. So if you're trading inside of here, those moves are going to be rapid and move from one side to the other. This is your bull side. And I forgot to draw this last one. This is your real bear zone. This is your bear area. This is your bull area. So this is illiquid, rapid. This is balance, 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 balance. So you guys see this, like if green is bull and red is bear in this orientation, bears and bulls are upside down inside of this range, balanced. Bears and bulls are upside down inside of this range, balanced. Inside of here, imbalanced. So this is a rapid run with resistance here. Your breakout is there, your breakdown is there. So an example is in all cases, from this price, I extrapolate like all the way out. If I wanted to buy this week, for instance, I want to sell a vertical credit spread, both sides. At this price, it is in a very rapid spot where it's going to bounce very rapidly between here and here. Oh my God, look what it did. Y'all see that? Isn't that cool? That monthly map will show you that expected range even before you do it. So you see this big range after earnings. You see how this matches with that rapid move, volatile and rapid. It's like mind blown. Do y'all see that? Okay, that's the point. You can see that before it happens. So now I know that the market is just in that pocket, and this is resistance and that is support for the course of the month. And so first and foremost, I know that it's not bullish up here. So this bull breakout requires a lot of movement to go. So I know it's pretty safe for me to sell calls beyond there. And it's pretty safe for me to sell puts beyond there. So inside of this range, I will buy my puts right there. And I will buy my calls right there. So breaking out of the bear zone, I want to be long the market. And betting that we don't turn bullish, I want to sell outside of there. So these are where I would sell my calls. So I would usually typically take this distance and I would add that distance to here and then sell my calls. So example, this distance here, I would add that distance there and sell my puts right there. Does that make sense? So when I have the liquidity, I'm going to clear it all out. When I have a liquidity map like this, in general, this is one of the things that would essentially just help you plan your options trades. This distance here, I'm selling a call. This distance here, I'm selling a put, giving it double the fat of the expected volatility. Well, I'm going to add that to that and then sell out of balance where I'm not going to strike in the money on this date. Now, inside of this illiquid zone, I want to be long if we break out of the bear side. So I'm going to buy calls right here. Inside of here, I want to be bearish if we lose the bull side. And if for every $100 I spend on puts, I would try to sell $200 in credit. So it'd be a 2-to-1 credit spread. So I'm betting that the market, essentially, if you see what this is saying, is I'm betting that the market stays inside of here. Because, actually, sorry. I'm betting that the market stays inside of here. If these calls go in the money, then that's great, right? If these calls go in the money, then I close that trade out, close that out, and then let it ride and close that out. If these puts go in the money, then I close that out, let this ride, close that out. If the market goes absolutely nowhere, I have made that premium and that premium minus the cost of the options I bought. Do we get that? So monthly map is designed for me to sell for credit spreads, iron condors, whatever. And that's the whole point. And a lesson on that's going to be very fun. Those of you that are longing a stock, you want to sell like a condor against a long position, make a little bit of income on holding DocuSign stock. You want to make some money on it while it's going nowhere, then you can sell options against it, like out of bounds, right? Sell covered calls, sell covered puts, whatever. Okay, that's the lesson for today, but that's monthly mapping that's coming out. Very, 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 2 weeks, we're going to start building it in 2 weeks. So it should be done in about 4 weeks. We love you guys. We'll see y'all on Monday. Go to rocketscare.com. Get the free trial. If you guys want the Black Friday coupon, again, use this coupon today. Just jump in. Half price for life. And we'll train you on whatever you need over the weekend. Give you some videos. That is for the monthly. Go here, sign up. Yeah, that's it. We will see y'all later.